Well, in US markets, Facebook has been unliked in a big way by investors, while closer to home, the Rand isn't feeling too much love either after the love fest going on in Sandton called BRICS. Jordan Weir, equity trader at Citadel. Good to have you guide us through the markets. Again, it's been far too long. An interesting day, though.
It has been. Thank you for having me. No, it has been an interesting day all in all. Local markets actually surprised to the upside today. Considering that news from Facebook last night, so we woke up this morning thinking that Facebook, being an industry that it is, might bleed through to the likes of Naspers, Tencent, and then ultimately sort of have a dragging effect on our markets. But luckily that wasn't the case. Naspers landed up sort of just flat for the day, and the rest of the market in general did quite well on our local shores, besides one or two shares like Capital and Counties, Clientele, Curo. But yeah, all in all, not a bad day. The Rand did weaken quite a bit, but I think that is just a lot of noise in the background that the Rand is sort of trying to get used to with the BRICS situation that you mentioned there.
And speaking of BRICS, China, I thought the suffocation of the Qualcomm NXP merger might have a bigger impact on perhaps a Naspers, because it shows we've probably entered a new era here where Beijing isn't afraid to flex its muscle, blocking one of the biggest semiconductor manufacturer mergers that we would have seen in history. It was a $44 billion acquisition, and it's a Dutch-owned company, NXP, Qualcomm, US-based, but it had to jump through some antitrust regulatory hoops in Beijing, and the Beijing authorities, in what I saw was a very elegant middle finger to Donald Trump, said no thank you.
No, exactly. It was actually very cleverly done on China's part, although yes, it was probably going to be one of the biggest mergers in history. I mean, Qualcomm had to get this merger agreed and accepted sort of by 9 different markets around the world, China being the last. And they sort of picked up around the beginning of the year that China might not actually give them the go-ahead once these tariffs started rolling out at the beginning of July. So ever since that happened, I think Qualcomm actually accepted sort of defeat and decided to take it on the chin. And yeah, they've got to pay I think it's a $2 billion breakup fee in order to, I mean, put this to rest now. But that is quite an elegant way of China to have managed it. It's quite scary. It's quite an interesting, I think, picture that they have now painted, and what is going to be coming, I suppose, in the future will be very interesting to watch.
Well, certainly for Naspers, and we know there's a very curious ownership structure, the vice structure for Tencent, and we're seeing a Beijing that is now willing to flex its muscle when it comes to commercial transactions. So I was somewhat surprised that the market took such a wait and see approach on Naspers, as you say, ending up flat on the day. And then the other big tech news stories, as you mentioned, was Facebook. And you have to feel for Mark Zuckerberg. I mean, he's down to his last $70 billion.
Yeah, the Facebook story is an interesting one. I mean, as we all know, they've had the privacy policy issues that have sort of emerged over the last year or two, and that's obviously been putting a big strain on the company. And then last night, after hours, they then did mention briefly that, the last sort of period or financial period, they've had decelerating revenue coming in, tightening margins, and then the ongoing pressure from these privacy policy changes that they've needed to implement. And then also in general, I mean, I can say it firsthand as well, I don't use Facebook as much as I did a few years ago, and maybe that's because I'm getting a little bit older and used to other apps that are out and about there, like Instagram. I see they're pumping a lot of money into Instagram.
Well, they own Instagram, don't they? They own WhatsApp as well. So they're pretty much buying out all of those newcomers that could have come to cannibalize their lunch.
No, that's it. So, I mean, if you actually go have a quick look at what they do have on their portfolio in general. It's just an amazing amount of big companies out there that we wouldn't even realize. A lot of the apps that people have on their phones are actually owned by Facebook, and I for one didn't know that half of them are owned by Facebook in terms of the smaller photography apps and video apps that are linked to the likes of Instagram, WhatsApp, and all of that. So, in general, it is a bit of a hard knock, and they haven't recovered. I've been watching their share price since open, and open pre-market said they were going to be down between 20 and 25%. And upon open, they were down about 19%, and they are currently 18% down. So
sure.
I thought there might have been a little bounce and correction, but not correction, recovery, but it doesn't seem so.
And so then currently it does sit with the record of the biggest one-day change in market cap. I see number 2 is Intel, which looks like just about a shade under $100 billion in one day, followed by Microsoft, Apple, and Exxon. And at that size, I think it's understandable that you can see such big value moves in percentage terms, according, in ratio and perspective to their market caps. Probably not the biggest percentage moves, but definitely in value. But Facebook looks like it'll end up with that record.
It does. As you know, the world changes so quickly these days, and the ability of companies to adapt at a rapid pace and adapt their revenue streams is crazy. So, look, there's a bit of a knock to them, but like you say, it's not massive in the big picture. A lot of us were worried that this might be the beginning of a few cracks that are opening up within the NASDAQ and the tech companies and stuff, but I don't know. I don't think there's going to be any massive, corrections anytime soon. If anything, bit of a sideways trend for a while. Just looking at some of the other stocks today, Netflix is up slightly, Google's up, Apple is up. So
Amazon, Apple are busy scrapping it out to be the first $1 trillion company. Where's your money?
I definitely think Amazon, personally. Look, Amazon has run. They have run a lot, and they could be seen as quite expensive currently. But we were discussing it today. If something like Facebook today happens to Amazon, I think it's a brilliant opportunity for investors to grab a few at a cheaper price. That's a brilliant company, and Jeff Bezos definitely knows what he's doing.
Now, Warren Buffett wouldn't call him one of the smartest businessmen he's ever met, and the one regret that he does have on an otherwise spotless and enviable investment track record, that's pretty high praise. And you look at the growth in Amazon Web Services and the run rate it's achieved there, the way the world is finally starting to realize the power of moving your software, your IT infrastructure into the cloud, the strategic advantage it has, and the head start that it has on some of its competitors. I think apart from Microsoft Azure, that's certainly a company I would be backing. Now, I don't know how many listeners out there would have seen or heard about the El Nino warning by the SA Weather Service a couple of days ago. And following quite closely on from the most recent drought, I suppose this is just another example of increasing climate variability as part of climate change, but it's got a severe impact if it comes true. You've got to go long food retailers, long companies that are investing in desal plants and that kind of thing, and obviously short your food producers. No,
definitely. I actually saw that warning come out I think it was on Twitter on Tuesday, and it took me by surprise. The average El Nino sort of cycle, I suppose, theoretically should happen between 4 and 7 years in a cycle, but this has now only been 2 years since we had our 2015, 2016 sort of dry spell, and I suppose a whole lot of different weather phenomenons all over the world. But it is something that did flag, though, just to, I suppose, make people aware that this could happen. But they did also have a big disclaimer saying that, look, it is very early and they can't say that it will definitely happen. But, if we have a look at the wildfires going on up in Mediterranean at the moment, there's been just weird weather phenomenon since the beginning of this year, just all over the show, be it tornadoes in the US, floods in Japan. So I think they're just being more cautious than anything, but agreed with you. I think we're going to go back into that space where we may see food price inflation, water prices going up. The Western Cape, I think, has a very, very tough few years ahead of it, just in terms of climate as well. Spoken to a few climatologist mates of mine, and look, although we can't predict weather or climate, they say that the general trend is that there is a bit of a drier climate coming down the west coast there from Namibia that could eventually impact Cape Town when I'm a grandpa, sort of thing.
Well, but you've got to start planning for it now. And I think if you're an investor, you've got to start looking at those companies who are providing solutions for a much drier world, which is why I mentioned companies looking at decel technology. And we know that PSG Private Equity is currently looking at that. We know that AECI announced results yesterday. It's got a water division, but obviously their agri division will hurt them, so that might balance out a little bit. And if you look at the likes of the food retailers, obviously they get a big boost from food inflation. Which would be your sort of picks in another El Nino type environment?
I think similarly the stocks that you mentioned before. Another sneaky one that I didn't see a few years ago was Rolf's. They are a smaller company, and their liquidity is they are, I mean, a bit harder to trade and less liquid than, I suppose, the bigger stocks. But those are the guys that are providing the farmers with, I suppose, alternative chemicals to look after the farms in different situations with the different weather patterns. So that is I suppose you could call it a sleeper that people always overlook. So I would definitely keep Rolf's on the card sort of in a year's time, just to keep that in mind. But yeah, in essence, I suppose what you just said there, AVI, ShopRite.
Jordan, I think that's where we're going to have to leave it. Those are some excellent choices, good selections for a world that is moving into, it looks like, increased climate variability. Jordan Weir, equity trader at Citadel, with your Thursday market.